Back to the bullish side. Joel Miller, Wall Street Capital. What do you got?
Oh, boy, you know, I'm very optimistic about the way things are going. I think we're going to have a little bit of a pullback. Obviously, there's going to be profit-taking as we open up in the morning. But I think for the most part, this is like a bouncing ball. We're going to have those ups and downs, but we all headed to higher ground, and I'm feeling good about it right now.
All right, guys, hang on. We'll get to the rest in just a minute. I want to bring in Bob Pisani, who's at the New York Stock Exchange for us, detailing today's big winners.
And the important thing here is we have stronger economic news and stronger commentary from banks and autos. That's important. Let's take a look at those financials. Look what happened over in Europe. We had strong commentary from HSBC as well as from Barclays. That helped lift the Nikkei to new highs for the year. In fact, we also saw, as well as the European banks, also doing well. So we saw nice moves across the board in France, in Germany, and in the UK, with the FTSE hitting new highs as well. Bank of America, $33 million settlement to settle charges over disagreements over Merrill Lynch with the SEC. That's a cheap settlement for them here. Nice move to the upside overall here. Then we had the weak dollar. There's an important issue here. Dollar's been moving down to new lows for the year against other major currencies. We saw cyclical stocks move to the upside. We saw Freeport-McMoRan hitting highs for the year, Alcoa hitting highs for the year, as well as Caterpillar also right near highs for the year. Finally, I want to mention the autos, and yes, it's cash for clunkers, but we also saw strength in other areas outside of cash for clunkers. Ford at a new high, Toyota Motors at the highest level since September of last year, and then even the car dealers like Sonic Automotive doing well here. AutoZone, which is in the replacement part industry, that whole sector pulled back a little, less bullish for them. Finally, I want you to mention two big home builders, Centex and Pulte. Remember, they are merging. They did have their earnings out after the bell, pretty much the same. They're selling fewer homes at lower prices, but a couple of the metrics, Dennis, did show some improvement. Back to you.
All right, Bob, stick around. I'm probably going to need your expertise. Let's go back to that Deca box, and let's go to Dan North at Euler Hermes. You're a bull. You think the market keeps going here? Is this the start of something even bigger?
Well, I hate to be wishy-washy, but so far I'm agreeing with everybody. I think we certainly are going to continue to go up.
I agree with me.
Well, we've gone really fast, so I'm not sure we're going to continue at that pace. And the other gentleman was talking about government spending and so forth, how that's a little bit artificial. Absolutely right. At this stage, that is the case, but it's meant to seed activity later, and I think it will work.
You mean borrow from the future?
Right. Well, Jerry Bowyer, you know, with Bowyer Media, the thing I don't understand is we wanted government spending and stimulus because all the economists are saying there's no way the private sector can lift itself out of this mess. So we have the government spending. It's clearly starting to work, and now we're upset about it.
Well, the private sector actually did get us out of this, and that's why we don't need the government spending. We're recovering despite the stimulus plan. But when you look at this, Dennis, what a lot of people are saying is we're not going to get a recovery because Obamonomics is so terrible. And what I say is we're going to get a recovery precisely because what you do is if you think there's going to be a tax hike next year, if you think there are going to be regulations next year, if you think there's going to be a lot of anti-growth stuff next year, then you bring forward your economic activity into this year. So what you're going to do is you're going to try to do everything you can to make the money this year before we get hit with this parade of horribles next year.
Right, so maybe we got to make hay while the sun shines. Harry Dent, you are the author of The Great Depression Ahead and are a very sobering guy. So what do you think of Jerry's theory there? Go ahead and make money right now because next year it gets tough.
Yes, I think so. I mean, the bigger picture is we get major peaks in the stock market every 39, 40 years. 1929, 1968, and now here late 2007. This is a longer-term bear market. Baby boomers are done with their spending cycle. We've been predicting this for many, many years, and we have been predicting a bear market rally to last 5 to 6 months into late August, early September. So we think we're getting near the end of this. It certainly could go higher. There's momentum right now, but we see further deleveraging in the banking system. In fact, unemployment is going to keep creeping up and keep triggering defaults on loans.
Okay, Bob Pisani, all of that certainly sounds worth worrying about. It's just that traders and investors seem to be feeling better, and that counts for something too, right?
Yeah, here's the problem. Traders all know this, and 2 weeks ago when the markets had moved up aggressively, 11%, traders came in and said, we are overbought, the economic news isn't as strong as traders say, and they aggressively tried to short the market for 6 or 7 days, and they failed every time for whatever the reason. Right. For whatever the reason, the stock market is not going down on bad news and is going up on any signs of good news. Traders can see that. As a result, shorts have very much lightened up on their positions.
Fear
but
fatigue,
futures traders are just as bullish as they were in October '07. That's scary at this point.
All right, we're going to take that up in a minute, guys. We're going to talk in a couple minutes. Got to take a quick break. Next up, we turn the focus to tech stocks. Big movers on that side today. I've been waiting for that. Plus, we're talking about the places where you should consider investing. Want to take advantage of this market? Then stick with me. We're back in 2.
For just a little while, you left me dead so far away. I